What is going on, everybody? I am here in wonderful, not so sunny Yonkers, New York, waiting for a few inspections for my real estate. Maybe I'll put up a real estate video on the stock channel, and I want to make a stock video. Guys, I want to talk a little bit more about PayPal. I'm feeling a lot more bullish on PayPal every single day. I actually have a couple of options in Square that I might get rid of and end up getting PayPal instead, more PayPal. Look, the price of PayPal right now is nearly at a 52-week low. It hit 59 and change. 52-week low was like 58.9. Like, we're right there. We're like within less than $1 of a 52-week low. These are the same prices that we had in July 2017, guys. Let's just hit that straight. July 2017. This is a company that's a cash flow freaking monster. So much so that they have a $5 billion buyback this year alone. They already bought back $3 billion. They're going to buy back $2 billion more of shares. If you're going to go 12 months forward, they're going to probably buy back another $5 billion. I believe last year they authorized $15 billion to buy back shares, if I'm not mistaken. So they got another $5 billion besides for the $2 billion more that they're going to buy back this year. At the current market cap of PayPal, which is around $65 billion off the top of my head, if you take $65 billion and you divide it by $5 billion, you're going to get around a 6.5%, 7.5%, depending on the fluctuating market cap buybacks. Guys, just think about that. PayPal in the next 12 months, based on current market cap, is going to be buying back around 7% of their shares. It's absolutely freaking massive. Now, if the price goes lower, they get to buy back even more. If the price goes higher, the buyback is less. But all in all, it's massive. Now, a lot of people are like, Adam, that's great, but why are they buying back shares? Well, they've been buying back shares. They did this for the longest time. Instead of giving a dividend, they're giving their shareholders value by buying back shares. Now, the craziest thing is, PayPal ran up during COVID. PayPal ran up to over $300 a share. And a lot of people think that it's going to go back to new all-time highs. Listen, I'm going to tell you right now, in my personal opinion, PayPal is not going to be hitting a new all-time high. PayPal is not a world beater. However, PayPal is also not a sub-$60 stock. I think PayPal is, $110, $120, which means that there's a very solid double up right now. PayPal just got a brand new CEO. His name is Alex Chriss. Alex Chriss was in charge of small business for Intuit. Intuit is QuickBooks, if you guys don't know. Now, he did a couple of really good M&As, which is mergers and acquisitions, while he was at Intuit. And he's considered to be a forward thinker. He's also very young. And I think that's good for PayPal because it shakes things up. Now, PayPal, in my opinion, needs to do a couple of things. They need to innovate and try to offer new products. That's my opinion. So the ex-CEO, or the CEO that we still have until September 27th, who's going to stay on the board, Mr. Schulman, he was in charge of like Braintree. He was in charge of Venmo. Venmo came with Braintree. And they needed to figure out a better way to profit from Braintree and from Venmo. So what they're trying to say is we're going to be using artificial intelligence, and I know everyone throws that word around, to use the data that we have from getting all of these Braintree clients and Venmo users and cross-sell them and get more revenue per user. What exactly does that mean? And what exactly is Braintree? So Braintree is unbranded PayPal. And PayPal is branded PayPal. When you go to checkout on websites, there's a lot of different options. Apple Pay, Google Pay, you can Shopify Pay, right? Shop Pay, and there's PayPal. And then there's a bunch of little smaller checkout processors that you don't know. When you sign on to a website, probably 7 or 8 out of 10 times you're going to be picking PayPal checkout. That's just the way it is. And PayPal is great for businesses. Specifically, if you're a business, it's really, really good for, they use PayPal a lot. More so than the regular processors. The businesses like PayPal. Also, PayPal offers a lot of safety for consumers, the retail people. Braintree, on the other hand, they make their own checkout using literally PayPal, but they call it whatever there is. If I'm not mistaken, Bookings.com, Airbnb, Uber, they all use Braintree, which is essentially PayPal. Problem is, PayPal makes less margins on unbranded or Braintree than they do with branded or PayPal. PayPal says, well, Braintree is giving them an opportunity to branch out internationally and to touch more businesses and to expand their user base. And they're going to figure out a way to increase margins and monetize more in the future. That's what they were saying off their earnings calls, the last two earnings calls. Whether you believe it or not, that's the question that you should be asking yourself. If you believe that, then you believe that PayPal has the ability to increase margins. Now, in order to offset the smaller margins that they're getting, so if you're going to look at their earnings presentation and you're going to look at their books, the margins that they're getting are offset by being leaner. So PayPal is firing employees. They're spending less money on a bunch of different, marketing costs and general costs across the board. And they've reduced their spending for the last 2 quarters. The reason they're reducing their spending the last 2 quarters is to become more profitable or more margin oriented in non-transactional margin. But then there's transactional margin, and transactional margin is exactly what it is. Stuff that have to do specifically with the margin, with the transactions, that is going down. The reason that's going down is because of Braintree, because of Venmo. Braintree and Venmo is around 60% of PayPal, and then PayPal is 30% of PayPal. That makes sense. And then you have this is a little bit more, like 10, like more like, I think it's 16% last time I said, because the number is not exactly 30-30. I think it's like 28, 28, 26. And the rest is for others, and that's where all of the growth is coming from. That's where all of the revenue is coming from. So if you believe that PayPal has the ability to think outside the box and take all the data that they have, right? Because the name of the game is all data, data, data. That's exactly what SoFi is doing. That's obviously what Palantir is doing, and a lot of other companies. If you believe that they can take all this data, then you believe that in the future PayPal is going to grow. Now, the margins are only going to go down for so much until it turns around, because eventually, once you keep mixing PayPal with unbranded, so branded with unbranded, eventually those numbers go down enough, and then you form a base. Now, PayPal's price has been trading between this just sub $60 and around $100 for like the last 2 years. It's absolutely crazy, and it just forms a bottom, which is, interestingly enough, the same price that PayPal was trading at since, I think, June 2017. In June 2017, PayPal was making $13 billion of revenue for the year. In the last 2 quarters, PayPal was making over $7 billion worth of revenue. So PayPal, in half a year, is making more revenue than PayPal did in a full year in 2017. Meanwhile, the price of PayPal today is the same as it is in 2017. And then you have something called PE, price to earnings. You have traditional PE, which is a trailing 12-month, and then you have a future PE. The trailing 12-month PE of PayPal right now is, I think it's like exactly at 30, maybe 31, something like that. Now you can compare that to other companies in the industry, or you can compare that against its own average. The trailing 12-month PE is lower than it actually was in the beginning of 2017, and historically, I believe the number is like 42 is the PE of PayPal. So even the gift or the love that PayPal is getting is undervalued. If you compare PayPal's average over the last existence to now. And then you have the forward moving. So forward moving is the next 12 months of revenue that they're going to be making. And remember, PayPal is not dying. Their revenue keeps going up. It's not like they're projecting smaller revenue. No, they're projecting higher revenue, which is absolutely crazy for me. Their projected forward moving PE is I think 12. In my last video, I think it was 14, I said. Somebody in my comments, I believe, said that it was like 12. Anyways, it's extremely low teens, or right before teens, which would be 12. It's absolutely super cheap compared to where PayPal is traditionally. And again, I'm not saying PayPal's a world beater. I am saying that PayPal is worth north of $100. Just north of $100, $110, $120. I would not be buying PayPal past $100, right? But at the price that there is right now, I am going to buy more PayPal. My play for PayPal is going to be, I'm going to buy options on them. I'm probably going to buy options for December 2025. I was buying for January. However, since they're getting a new CEO, Alex Chris, in September 27th, I want to give them some time to grow into the position. Actually, I was listening to Chris, Carlos, and Ahmed talk on Finance Junkie, and Chris is like, I'm going to wait for the next options in January 2026. And he's like, I'm just going to let, PayPal build into the company that they can be with this new CEO. And I agree with it. That's why I want to extend it for 1 year instead of January to December. Now, the options premium you're paying is more because you're getting an extra year, but I think it's warranted, especially with this new CEO, that I think he's going to shake things up. And to shake things up, you need more than a year's time, in my personal opinion. So buying myself 2 years to see what happens with PayPal is going to be really, really good. That's my personal opinion. PayPal can go lower, but I think risk versus reward, PayPal is a good play, in my personal opinion. You guys can do whatever you want. All they need to do is acquire a company, make a really good acquisition, or be able to do an additional offering and cross-sell products, even if they make a brand new product. And since they have a shit ton of money to make acquisitions, they can get that done. And since they have a brand new CEO who's forward-thinking and did really good with Intuit, I believe that there's going to be some innovation happening within the payment processing. And like I said, also, they just introduced the stablecoin, which is another revenue generator where when people buy the stablecoin, they put up cash. The cash is then reinvested into short-term treasuries, short-term investments, things like that. So yeah, that's my take on PayPal. I appreciate you guys chilling with me in the morning before my inspection, and I am gonna go diversify my income with some real estate. Thank you so much. Let me know in the comments down below. Actually, stop. Let me know down below what you guys think about PayPal. Is that on your radar? Is that not on your radar? Are you planning to buy PayPal? Are you not planning to buy PayPal? Why do you like PayPal? Why don't you like PayPal? And what else do you want to hear about PayPal? Yeah, I just think it's stupid cheap at sub $60, and I like to get companies that are at 52-week lows, especially companies that are at 6-year lows. It's absolutely crazy, guys. Think about that. PayPal is at a 6-year low. Unbelievable. For a company that's an actual behemoth, and everybody knows PayPal. It's so globally recognizable. Alright guys, thank you. Have a great day.